Well, good morning to Dave Skirman, newly retired from First Ontario Credit Union, for the last Finance Friday segment of the season.
Yeah.
So you're taking a summer break, but you're going to be back with us in the fall.
Back in September.
And you've got a couple of great questions, viewer questions. So let's get right to this. So the first one comes from Liz in Hamilton. She says, as a result of dealing with an estate, we think that my husband and I have set up our TFSAs with each other as the beneficiary, but she's heard something about naming a successor holder being better than being named a beneficiary. So what are the differences? Because I haven't heard of this either. So great question, Liz.
And a lot of times your financial institution doesn't even really talk to you about it. So so great question. I'm glad it was sent in. And there is a big difference. Number one is only a spouse or a common law partner can be named successor holder. So in Liz's case, yes, she's talking about spouses, so that's fine. Anyone can be named a beneficiary. But the big difference is between a beneficiary and a successor holder is how the money is treated and how the account is treated. So if you name somebody a beneficiary, then they will get the money, but the account ceases to be a tax-free savings account. So there's no more tax-free status after you get the money.
So when you take that money out, then you're going to be taxed on it.
Now, if you have room in your own tax-free savings account, you could put some in, but only up to the available contribution room that you have. Now, a successor holder, big difference. You get to keep the account and the money. So the account would continue to be a tax-free savings account as long as you want it to be. So it continues to grow tax-free inside the TFSA.
Could you still add to that tax?
Only up to your own contribution room. Yes, you could, but to your own contribution room. The other thing you could do as a successor holder is you could combine those two accounts into one. So if you each had, say, $50,000 in a TFSA, one spouse or partner died, you could combine them into your own $100,000 TFSA.
Okay, so something to definitely
look at. Now, the other piece, too, on that, Annette, is if you don't name either a successor holder or a beneficiary, what happens is the money goes into the estate, and then it's public. It doesn't pass through right away. There's probate fees. It takes time. So you should name one or the other. Don't just leave it to go to the estate.
Okay, okay. Another great question here from Janet, who is getting ready to retire in about a year and a half. Congratulations to you when she's 60. She says, at what point should I start transferring money from my RRSPs into TFSAs?
Great question. And again, I think what she probably meant is when do you start transferring RRSPs into a RRIF, a Registered Retirement Income Fund? You can't transfer RRSPs into a tax-free savings account. If you wanted to do that, what you'd have to do is take money out of the RRSP, pay tax on it, withholding tax, and then make a contribution to a tax-free savings account. So you don't want to do that. So I think what she's talking about is transferring the RRSP into an income in retirement. But you probably don't want to do that until you retire and need the money. Because, again, of the fact that once the money comes out of a RRIF, once you make that transfer, you've got to start paying taxes on it. The other big thing on an RRSP is once you cease to make it an RRSP and put the money into a RRIF, you have to take it out. There's a minimum amount every year.
Right.
You have to take it whether you want to or not. And since she's still working, she probably doesn't want that income stream yet. So now the other thing on an RRSP is you don't even after retirement, you don't have to take it out or put it into a RRIF until you're 71. So she could even put a little bit into a RRIF in terms of getting the income that she wants, and then leave the rest until she needs it.
Okay.
So a couple of things to consider there.
All righty. Okay, you're considering going back to PEI. You're so relaxed, no tie, it's great. But Dave is going to be back with us for Finance Friday in September. Yeah. So think about all summer. Email your personal finance questions to Dave at financefriday at firstontario.com, or send them through Twitter at finance_Friday. And if Dave answers your question when he gets back on air in the fall, you'll get a gift certificate from a local business in your community. Enjoy PEI. Enjoy your summer.
Thank you very much. Gonna miss all you guys over the summer, but we'll see you in the fall.